What's up you guys, this is Junior Trader and in this video we are taking a look at ARM stock. So we have ARM's earnings this week as well, so those are on Wednesday in the post market. So we'll identify what potential use case may happen, and because guys look, you just never know how the Wall Street is going to take the price, even if earnings are great or bad, guidance call, whatever, great or bad, you just never know. It's completely depends on where the money is going to flow that time. So there are technicals, in the chart that are different before earnings, during the earnings, and after earnings. So we'll take into that as account as what we do in all the videos. So with that, please hit the like and subscribe, and also please note none of this is any financial advice and is only for education purposes. Okay, so let's start off with the technicals right away. You are already aware about this flush that I called out after losing that blue box. That was the zone of demand, right? And once we lost it, we got the flush. We came down to this level of $85. So, and then thereafter, we have been rebounding, and that's fine. I talked about, guys, this rebound may come, and the first level for this rebound to come all the way to would be $104 range, right? This is where it came all the way to. All these levels are marked by my significant levels, my indicator as well. So now what, right? So there are a couple of things here. First of all, is this rebound turning into an uptrend? You can see there's this pivot. We didn't flush lower, but we held that level. So that's an important thing to talk about. That will touch base in just a second. Or as if it about to continue lower because we are still below 20 and 50 days moving average. So what it tells me that ARM is at a pivotal structural change, that direction is right around the corner, where direction based on off of your thesis, which we'll talk about in this video, can be taken in either direction. We are still far away from this particular trend line, so you can expect, I'm not going to expect this choppiness to happen. I don't think so. I'm just drawing this in the just for the reference so that you can understand that this pivot line is still far away. So this will not play in the technicals here, unless it would be, chopping around and then it will come in play, or if it rebounds, then yes. But I would like to use the 20 days moving average for that, because we are right around there. Because if we pop out of this level of $104, then this can go all the way back up to $115 as well, where this blue box is back in. That's where this support is turned into resistance now over here. So this is another area for this rebound to continue. But for that to happen, what we have to see in the price action is, and that's why it's at the pivotal point for the bulls, that this pivot is formed at another important level of $95.54, this demand zone. So it's, as I said, right over there. As if it breaks out and above of $103 to $104 range, I would definitely want to see it's going to happen in a day. If it happens, that green candle is what you would need to catch on to, and it going above 20 days moving average. And if it does that, then this rebound can come all the way to $115. That's a possibility, and accordingly stop loss could be either below this candle or whatever, however you want to do your risk management. Now, however, guys, if we don't break above this range of $104 and we see another red candle show up here, it's most likely going to go lower, but you can wait for the confirmation at the flush zone of $95.64, because if this level loses, flush happens, this will bring it down to $85.61 again. But this is the technicals as in for until Wednesday. Then we have earnings, things will be different. Now, let's talk about that first. But let me show you actually our 4 hours interval as well. And let's actually go to the hourly interval. Yeah, so on hourly interval, we are above 200 hours moving average as well. So as long as, there is a lot more possibility of this to keep holding as a pivot. We have 20, 50, and 200 hours moving average as a potential hold on this. So things are not looking that bad to go to the upside. So it's not going to be fully bearish, I guess, guys, until earnings. It might either stay choppy or go up. So that's what I'm have a feeling, and based on the technicals and the structure that ARM may do. All right, but yeah, since there's no guarantee, anytime we loses these levels of like $99 as well, and yeah, then we are going for eventually the flush after breaking 95 as well. All right, so based off the structure, stop loss can be taken on either direction, and you have the breakout levels to watch because the structure will change above or below these levels, or will start to change below certain levels as well, as I just talked about. So, and if you want me to repeat myself, $104 and above breakout is a continuation to $115 range, and break below $99 is going to start to look at weak, and most likely it will come to 95, and then after 95 there's a flush all the way down to 85 almost. So that's that. Now going back to the daily interval, now let's talk about the scenarios through the earnings, what possibly may happen. Look, if after earnings this thing gaps up but fails to go above 115 just during that gap up, it's not fully bullish in the structure and it may continue to cool off. But it may cool off, that is not bearishness, because this $105 is a potentially a significant support level. Then why? Because this intraday, this not intraday anymore, but this is more looking like an uptrend now, right? So that's one of the possibilities. The other possibility is that if we gap lower, right, and let's say we gap lower around $85.70, at this point, then the only thing it can save it is almost the $79.92. All right, almost $80. This is the only level that can save it. Yeah, if it can't be saved at then $80 after gap down, then it's going to continue lower. If it gaps down just below $96 but stays above $85, I do expect next day continuation may come up to $85 at least. But then you have to see if we receive a follow through. If we don't, if it starts to form a double bottom, then you can expect again in coming days some rebounds after earnings that may come. But that's how I'm looking at ARM going into this week. Because we have earnings, we have to separate out the possibilities before earnings and after earnings. What can be expected out of ARM in the price action? All right, cool. Guys, that's all for this video. If you found it helpful, valuable, please hit the like, subscribe, and I'll see you in my next videos. And if you need access to my tools, links are in the description below. All right, bye.